go into an hour and a half on this, so I'll make sure I'm efficient with my discussion points. But what we're going to go through today is just a few things that I think are germane to aircraft leasing and the technical side. First of all, negotiating your lease, so before the deal is actually done. Two, a going concern. And then three, the end of lease. So these are kind of the trifecta on a high level of how the technical issues should be approached from the leasing side. It's no surprise that the leasing industry and vis-a-vis the MRO industry is a massive part of aviation. $81 billion as of last year. It's down, unfortunately, down 36 billion over the next 3 years as forecasted. But before that, we were looking at a massive. We were looking at an MRO space that has continued to grow, and this is due to OEM interest and also individual MROs and JVs that work with the OEM. So this is due to the fact that we have a larger fleet, utilization was up massively, and the rising cost of maintenance. So the growth in lease fleet, if you look at that on the leasing side, with the MRO space, and then also the rising cost of maintenance, and now we have the new challenges of COVID, and we are in uncharted territory. And obviously, these are learnings we are taking in every day when it comes to how best to deal with this. I mean, Alan, I think if you remember way back when, kind of only a few months ago, and you're probably already pretty familiar with this, the fact that we couldn't inspect aircraft, airlines and leasing companies couldn't take delivery from the OEMs. So now we're looking at how best to deal with a new situation, given the fact that airlines have made massive there have been redundancies in airlines. We don't have the information access we used to, due to the fact that we can't be really on the ground, on the apron, and in front of the aircraft as much as we have been, especially for those that are parked. But the overall takeaway is, why do these technical issues really matter? Well, of course they matter. Operationally, we have to make sure that airlines are able to dispatch their aircraft reliably. For an investor or a lessor, this value retention and residual value is paramount to the asset. And then, of course, there's a regulatory side of this, which means that we have to adhere to the regulatory issues of usually EASA or FAA, depending on the jurisdiction where they lean on, but to make sure that these records and the technical things are being taken care of in a proper way, and that in industry best practices and accepted. This is important especially for those of us who have to transition of aircraft from lessee to lessee, or lessee to lessor to lessor. There is a certain amount of due diligence that must be taken into consideration when looking at these transactions. And usually, in a perfect world, you get to go on site, take a look at the records, go inspect the aircraft. And now we have to do a lot of this kind of maybe sight unseen. So we have to rest on the fact and lean on that there are regulatory requirements, and the fact that lessees and lessors must represent that these regulatory requirements are being adhered to. So these are just kind of the high points of negotiating your lease, and these are important. Now, granted, these are beyond the legal. We have legal terms. We have the lease tenor. We have the lease rate factor that governs the lease rate itself, and then some of the other ancillary kind of more cost point items. But when negotiating your lease, this really comes down to the points that are important at that time, and that is really looking at the market, the leverage a lessor might have when negotiating a lease, or the lessee. Only a few months ago, actually, up to last year, it was a very airline lessee heavy negotiation bandwidth with regards to the fact that lessees needed aircraft, but also lessors were desperate to do deals. So airlines were calling the shots, and that really has an impact on the whole spirit of the lease negotiation. And in some cases, it does leave a lessor a little bit exposed when it comes to some of the commercial terms that normally they would expect, especially vis-a-vis a credit analysis on an airline. So the monetary components, when looking at the technical side, so let's overlay the technical side, we look at obviously reserve rates, and these are maintenance reserves, which are obviously the ancillary rental based on utilization for that aircraft, given that the profile, the mission profile, and the utilization profile over the time of the lease. End of lease adjustments, those are usually kind of vis-a-vis the reserve rates, but also go hand in hand with the return conditions of the lease. And these are obviously the terms that are required for redelivery from the lessee back to the lessor at the end of lease. And all this kind of winds up into the other negotiated points because everything becomes a negotiation. It really comes down to the requirements of either a lessor or lessee and what their total objectives are of that lease. In some cases it might be a complete requiring to meet a certain cash obligation or cash number, or to have as little as outflow as possible during each month. And some of these are so paramount in the negotiation that it really does forego some of the other terms that might have been more important. So when we look at leases and we start to go through the technicals and we start to carve out the technical pieces and we kind of look at what was happening, the spirit of the lease is pretty much pervasive throughout the document. As you can see, who might have had negotiation leverage on this. And never, rarely, I mean, obviously leases have common terms agreements, but in some cases you have a common terms agreement that dictates the full structure of the lease, but also an aircraft specific agreement, which might be specifically to that aircraft at that time, given the spirit of the lease and the time and the marketing challenges that might or might not exist. So we look at these negotiation points and we say that these are really paramount when it comes to the technical points as we are looking at the monetary or sometimes the more quantifiable items when it comes to the negotiations. What does that really come down to? That comes down to, and this really is a perceived credit risk, is cash maintenance. Are we looking at really the position of the airline, whether it's a weaker credit or a volatile jurisdiction? Are we looking at more moving away from cash reserves to end of lease compensation? And and then you also kind of look at where perhaps maybe the market is for that aircraft at that time. But cash maintenance really was for the last number of years prior to kind of where we started to see the uptick of the market. Maintenance reserves were pretty predominant. They were a security remedy and part of the security package from a lessor to a lessee to ensure the fact that the asset was being maintained and that there were mitigants on account or remedies on account for that lessor in case things went bad. Well, as we all know, things right now have gone pretty bad. So really, no perfect credit has escaped really some of the requirements. And this is where we kind of go back and say, well, have we learned our lessons? Really learned the fact that lessors are able to protect their assets in times of crisis, such as these, because there really hasn't been, in some cases, an ability for lessors to actually claw back some of the monies that they might have normally had on account, in lieu of perhaps maybe taking a larger credit risk for something that would be maybe towards the end of the lease. So we look at this and we look at this credit kind of matrix and we say, okay, what is important and what is trying to be accomplished? In a perfect world, a lessor would have access to a cash security deposit, a cash and account for maintenance reserves based on utilization, and also some kind of end of lease adjustment in order to ensure the fact that they have access to the things that are required in the event that there is a default or impairment. So we look at end of lease adjustments. This has always been a factor. And all this kind of goes back into how does the technical side kind of play into the profile of the lease and the expectation of that lessee using that aircraft. And that it's aircraft specific, it's maintenance program specific. And this really drives a lot of the end of lease exposure, whether it be a payment from a lessor to a lessee or a lessee to a lessor at the end of lease. And the understanding this, and we'll go through this in a little bit, is how to model this best out to understand kind of the nuances and really where a lessor might be exposed when it comes to a risk profile, either technically and also credit wise in some cases. So we look at this lease negotiation and we say, okay, we have letter of credit. Possibly this is where we don't have cash on an account, but we have access to a letter of credit from an approved bank. And that should be equal to, at some point, portions of the maintenance during a time, or the lessee trying to prove itself throughout the lease as to being a better credit and say, okay, fine, we'll commit to a letter of credit, but we only want it available for the first couple of years because we don't need this. We're a strong credit, et cetera, et cetera. And of course, then there's the redelivery conditions where it all kind of comes together, which is specified in the lease agreement. This is a negotiated point. That negotiated point usually is constructed on how best the aircraft will be utilized and the expectation of that lessee at that time of where they might believe they can manage those lease return conditions. A lessee, an airline will not usually agree to, if they can't, they don't have to redelivery conditions that they cannot actually obtain. So if there's an expectation that there's so many thousands of cycles being consumed and used and hours over the term of a lease, whether it be 10 years or 12 years, this is something that the lessee will want to agree to, unless the fact that the lessor has more leverage in this situation. So usually what we end with is a lease term based on the ability for a lessee to perform a C check or a heavy check or an airframe check at the end of the lease, and some kind of threshold, minimum or otherwise, when it comes to larger component costs of engines and life limited parts. And of course, there's some clearance in that with ADs, and we'll talk about that in a minute. So of course, that was then. That was the perfect world. And now we're in a world of challenging chaos where every day seems to be something new. What's happening with lease negotiation? Well, I wouldn't call it as a lease negotiation in so much as maybe a restructure or a modification. Some of those terms get very precise and specific, and we don't want to use, in some cases, lessors don't want to use the word modify because that would trigger an impairment of their portfolio. So what we're having is kind of a reworking of the lease at that time going forward. And in most cases, probably what everybody has seen so far is the fact that you are seeing power by the hour agreements. First, there was a whole chunk of lease deferrals. We're not paying these rentals. There was also forbearance in there as well, which was, this is not going to be deferred and tacked on to a longer lease. This is actually going to be not paid at all. So what happens is the fact that you have a power by the hour agreement as a second round. So the first time was, we're not going to pay the leases. We're not flying the aircraft. So we don't want to pay. We can't pay. We're not making the money. Now we're coming back to the table again and saying, well, fine, we'll pay you what we use with the aircraft. And that usually encourages some kind of minimum lease payment, followed by utilization-based power by the hour agreement at some nominal dollar amount per hour, per cycle for the use of the aircraft. It's a little bit of a sticky wicket in the sense that it's for an airline that has both leased aircraft and owned aircraft, that it really discourages, obviously, the power by the hour aircraft, because the operator is paying power by the hour for the aircraft or use of the aircraft. But what has happened and comes into the technical play is the fact that a lot of these aircraft are not being used. So either we have a lower utilization, and which means we'll have lower reserves on account in the event in the perfect lease, if they're on the perfect lease negotiation. But that also means we're deferring maintenance. In some cases, we might be accelerating maintenance. So for those aircraft that have just returned out of maintenance, a heavy check or an engine shop visit, this is great. The aircraft are not being used. The hours remain low from shop visit. But for those that should have a shop visit, and we're expecting to have a shop visit, and their value is based on that shop visit happening, this could be a little bit of a kind of a conundrum for both lessee and lessor. So what we're looking at is a new way to look at the industry, to look at the lessee relationship. They have tried to be more collaborative when it comes to how best to deal with the aircraft. I mean, be all end all, and as everyone pretty much knows, a lessor wants an aircraft to be maintained and stored properly and insured. So anytime that is removed from this, and there are cases that have been, there will be repossessions because lessors will finally be fed up with the lessee relationship, recognizing that perhaps they have to choose winners and losers on this timeline as to whether airlines that will actually survive and those that won't. And those that won't survive, they'll take their assets back as soon as possible and try to make sure the records and the airframe are recovered. But right now, the going concern is, okay, fine, we don't have a place to stick the aircraft. So if you are airline A out in country B, and you have space on your apron to park and store and maintain and insure our aircraft, we're fine with that for the time being. That won't last forever, but it is something, an interim stop, and we'll talk about that a little bit. But there's also this kind of juxtaposition as to whether you have a long-term planning and short-term planning, and that is really depends on how airlines believe that the traffic recovery is and how best they can get their assets deployed, redeployed again. So we do have other issues coming down, and we're going to have when it comes to the technical side, but it also on the lease side, which is potentially that there'll be cram downs, which means that the airlines will cram down these terms to the lessors en masse, given a broad swath of aircraft types, or certain metrics of a fleet or portfolio, given their belief that what the value of that aircraft is, or what the value of that aircraft will be going forward to them. So there's a lot of other things here. There's a whole separate presentation that we can discuss on how the aircraft markets themselves, but all these kind of come in through what we believe is the technical underpinnings of how this is all taken care of. So that's the pre-lease. Let's go to the going concern. So as we all know, maintenance planning documents, NPDs, and maintenance programs have gotten a little bit, they've gone from chunkier tasks that were very we used to call them heavy checks, C checks, heavy checks, that usually were done throughout the duration of the aircraft life, and airframe and engine maintenance were a little bit more onerous, and these costs were a little bit more expensive. What has happened over the years, because OEMs have listened to airlines, they've also now are deploying technologies that we didn't have available to us way back when. But there are obviously some more complex maintenance programs. Usually the regional jets and the turboprops seem to have a little more complexity to them when it comes to the MPDs. The newer narrow bodies and wide bodies are now going to a more systematic, simplified version. There are smaller checks in between the larger 6-year, 12-year checks. However, what is happening, given the technologies available to us, is the fact that there's more proactive technical maintenance going on. The aircraft, sorry, is now speaking to the OEM, to the airline, talking about, it's actually giving feedback as to parts that might fail or areas, so it's more on condition. There's more proactive replacement of areas and or systems on a almost kind of daily basis, or not daily basis, but weekly basis, or whenever the aircraft says, hey, this part's going to fail. We have redundancies, but this part needs to replace for the MEL and has to have, or to dispatch, have those systems available to it on a redundancy basis. So yes, it feels like we've kind of gone back to chunkier tasks, or with the 6-year, 12-year checks, or 8-year, 10-year checks and the like. But this technical ability for constant feedback between the aircraft, the airline, and the OEM for maintenance is a little more predominant, and actually is trying to make things a little bit easier when it comes to the maintenance of the aircraft. Of course, there's always the OEM supported programs. So this really comes down to a transfer of risk. This is a very high level slide on this. I really didn't want to go to the deep. Again, this could be a presentation unto itself. But what the OEMs have finally realized, that there is not one package and not one bracketing of this fits all. And the fact that there are aircraft in different phases of life, and there are different airlines and different ways of using the aircraft. So for newer aircraft, especially the brand new models, there really is the risk acceptance by the OEM that they will support the aircraft. And that really is providing utilization-based supported programs, especially for the engines, and the airframes as well, but more predominantly on the engines, because the engines are a bigger risk in some cases. But this really provides for a little more cost visibility. It provides for the appropriate resources. You should have, whether it's a power by the hour program, or to the other end of the spectrum, a prepaid time and maintenance materials, or kind of on your own at the end, where you find your own MRO relationship, and you maintain the aircraft. Obviously, some airlines maintain their aircraft in-house. Those are supported by the OEMs as well. But what you have inherently is the fact that as the aircraft become more technical and more complex, that the training for some of these airlines becomes immense, and that's an investment. If an airline is taking on a whole fleet of aircraft, obviously they will invest in that training. But for other MROs, investing in an aircraft platform and an engine platform that they can't really forecast and see a massive inflow of cash over the near term or the long term might be an onerous proposition. So the OEMs, in their best interest, will try to work with independent and also kind of subordinated entities around the planet to ensure the fact that those FBOs are available and that maintenance is that FBO MROs are available when it comes to normal scheduled maintenance, and also when it comes to maintenance that might be a little bit more last minute, or in the case with what we've had with the engine programs as of recent, all last year, that the chokehold became on the newer side. So the OEMs are taking more of the risk at the beginning. But the problem with a lot of these transfer risk programs, especially if the OEM does not release that risk, is the fact that towards the end of life, you do have a little bit of an issue when it comes to transferring from lessee to lessee. You have to have buy-in of the programs. It becomes complex. It becomes expensive. But be all end all, the OEM supported programs in the beginning are a nice way for airlines and owners to transfer the risk to the OEM when it comes to new programs. Here's just a quick sample MPD and this is really the top left one is for an E-jet, and then there is the one for the ATR. I put these out there just because of the fact that they are pretty complex. These are based on utilization, but also calendar. So you have multi-parallel checks running in parallel, usually based on hours and cycles flown, but also based on structural thresholds on cyclical and also calendar based. And the OEMs have really tried to start to coordinate those calendar checks with the utilization based checks, because sometimes in the past they really haven't always coordinated, and your aircraft literally could be in shop a lot based on the fact that the coordination between a calendar check and a cyclical check wasn't always managed as easily. They're working towards that. Obviously, the last thing you want is your aircraft out of service. But then again, right now with aircraft being parked and not being used as much, there has been, in some cases, airlines actually saying, hey, we've got downtime. We want to make sure our aircraft are ready to go. We will put these aircraft into maintenance now. And when the time is to redeploy and reactivate to service, the aircraft are ready to go. Others are taking a different approach and have stalled a little bit, have deferred maintenance, or have stopped the clock. As you can tell, most of the airframe maintenance, in some cases, especially the structural stuff, and it's definitely for the Airbus and Boeing aircraft, the airframe maintenance is calendar based. So whether you fly the aircraft or not, the airframe checks still continue. So there has been a work around with some of the OEMs and also with the airlines to do a clock stoppage, the fact that the airframe maintenance should not continue on. However, what happens in those cases is the fact that at some point you have to do the maintenance. And if you're not doing the maintenance now, you will have to do it all at once. And that will cause a little bit of a chokehold when it comes to kind of the availability of the MRO facilities to get aircraft back in, especially the longer aircraft are stored, as we all know, where we can put them into a deep freeze, but pulling them out of deep freeze requires a lot of calendar limited items that probably would have had to be replaced anyway during normal utilization, but now have to replace because they've been sitting in a desert or someplace perhaps not as airplane friendly for storage. So there is no easy way out of it, unfortunately, but each airline, hopefully with the OEM, have been collaborating as best to deal with the aircraft technically. Maintenance reserves, we spoke about this in the beginning, really is what some would call ancillary rental. And this is the additional rent paid or supplemental rent or supplemental fees, if you will, depending on how you want to account for it, of funds that go in conjunction with the use of the aircraft. There is usually baseline costs that are provided by the OEMs as to best how to account for the maintenance costs for the various components for the airframe. They'll give their best guess on the engines. Obviously, this is part of the numbers they do to pitch to airlines for buying the aircraft, but these are the costs that they would have to assume. And so, these are internally generated, and they also are catalog list price. So we understand a catalog list price might come out for the life limited parts of the engines. These are published, and usually in a lease, they're referred to as a CLP, and there is either the cost of the catalog list price at that time of return, or in some cases, when it comes to the airframe costs or maybe a shop visit for the engines, it's an escalation, an annual escalation, usually about 3 to 4% per annum of additional costs above over year as costs of maintenance increase. This is all based on the aircraft utilization. So you're looking at a reserve rate as a function of flight hours, flight cycles, calendar months, and then of course APU hours, which are usually kind of a pro rata use of the auxiliary power unit, depending on how it's being used. So, but what we have are obviously the stuff like landing gear are usually done by cycles. So every time the landing gear is stressed, obviously that is considered a cycle. In some cases for wide body aircraft, you might have low cycles. So the landing gear will time out first on the calendar basis, usually 10 years, thereabouts. So whatever is the most limiting factor usually gets the one that's kind of put up against some of the reserve analysis. Obviously, for the hours and cycles utilization, will drive, especially of a high utilized aircraft. Usually, narrow bodies are one cycle to every 2 to 3 hours. For wide bodies, it's one cycle to every 5 to 7 hours, if not higher, depending on kind of how the aircraft is being used. Internationally or otherwise. For turboprops and regional jets, it could be 1 to 1. If not, it could be one cycle to every 0.75 hours due to the fact that the stage lengths are shorter. So what happens with those is that you're driving your cyclical based costs higher because the fact that the utilization is a little bit ratcheted tighter and you're spending more cycles and hours. All of this also gives a consideration where the aircraft will be operated. The environment is key. We've all heard about aircraft operating in the desert, engines creating glass due to the heat. That puts stress on the engines, especially hot and high when it comes to very high temperature, high elevation operations. That puts stress on the engine as well. So we look at how best to consider, and that's usually a subjective sometimes additional cost based on the lessor and how they calculate this in their own algorithms, if you will. But those considerations of operating environment are key to the expectation of how the aircraft will come back. So if you're in Finland and it's cold and dry all the time, then that's a fantastic operating environment, and you might get a better elongated utilization profile based on that operating environment. If you are in a high polluted area, hot region, and a high elevation, that becomes a little bit more stress to the aircraft, and that should be taken into account. So what happens with this really is a forecast maintenance modeling, and you can see the bottom two parts really is a portfolio review. We have a best case and a stress case, but this analysis should be done to really kind of deal with and understand, and this is a portfolio, this is not just one aircraft, so that's why it's not really, you're not getting a mirror image of reserves versus maintenance cost, but how best to see where you might be compromised during the use of an aircraft, and where maybe the lessee or the lessor might be more exposed during that time. Understand the fact that you have cash inflow and outflow of the lease due to the reserves inflow and the cash outflow on qualified maintenance events, or QMEs, the duration of the lease, throughout the term of the lease. So you can see in the stressed area, which is interesting, the fact that if you look at the reserves balance, the balance stays where it is for the most part for the first couple, this is a couple of years, and this is a sample portfolio given a sample stress. But what's happening is obviously the aircraft are not being used. And little do we know that when we looked at these stresses and we did this analysis a little while back, well before our current environment, how much this might be true. So yes, you have reserves on account, um, to handle kind of expected maintenance events. However, when you're not using the aircraft events don't happen as much, and your reserves are not being depleted. So, or conversely, not being accrued. So these are just really different ways to look at the technical side on how to model a portfolio when it comes to the technical kind of area pressure points, if you will. And this really does a little bit a deeper dive into that, which is really what does this tell us? Well, first of all, we have, in this case, this is one aircraft, and we have an opening balance of reserves that were inherited when the aircraft perhaps was purchased, or you're doing this reserve analysis maybe halfway through or a couple years in, and you have a balance of reserves on account. So we have a forecasted cash flow in, out, for the duration of the lease. We see the weakest points where how much these cost events might happen. This is all done on a yearly basis. So and so you can do this on a monthly basis, a quarterly basis, or a yearly basis. Yearly is a little bit, for the sake of this argument, a little bit easier to understand because you can see really in 7 years' time that you have a large outflow of cash due to some of the shop visits on the engines, and the heavy checks. So it does give a very distinct and discrete analysis on an aircraft by aircraft basis. But this also tells you where you should, if you're going back to the negotiation points, how you should negotiate a lease, and your own pressure points as an operator or as a lessor, to where you might be there might be a cash issue. Um, so that's a normal analysis. This is what should be done in all cases. So let's just jump a little bit further into the monitoring of your asset. This is in conjunction with, and I'm sure our other speakers throughout the rest of the afternoon will discuss this really in detail. So I won't go too deep into this, but this really is access to the aircraft on an annual basis, per the lease. These are typical industry accepted lease terms. And what you're looking for really is you're seeing the records. You're asking for a very comprehensive, detailed list of records on a yearly basis. In most cases, for the more astute airlines, these can be done usually digitally, although not always. So in the olden days, we'd actually go to that airline, spend time in a usually a windowless room with no air conditioning or heating, because it's kind of like doing an audit. They don't want you to stay around and get too comfortable, and you are going through boxes of records. Now, some airlines, some of the younger airlines, have already incorporated more digital records into their their management systems. So a lot of this can be done digitally. So they would usually take digital records, or they would scan the dirty fingerprints, DFPs, for the task cards, scan them into a system, send the originals archived, usually off-site, to protect the records in case that there's a fire or some other incident that might compromise the records. Because as we all know, without the records, the value of the aircraft is almost meaningless, unless you want to spend millions of dollars recreating those records and time and money. But what you're looking at is to ensure that the records are being kept in English per industry accepted practices, that they're being organized by maintenance visit, by regulatory authority, by task card, by chapter, and you're able to access the information you need as much as possible. And it really is also keeping access, having those records digitally on your own side, especially if you're an owner of the aircraft, if you're the lessor, is paramount to ensure the fact that in case something does happen, industrial action and or default or insolvency, and the records do get separated for some reason or get held hostage or otherwise, that there is a backup copy of these records. So for the younger airlines, that usually is easy. There's a package that can be generated by the airline, sent to the lessor, and you can have those in your own, or you have that direct access, systems allowing for the records. For larger airlines, and larger and older legacy carriers, this is a little bit tougher, because they were not able to grow from the ground up organically with some of these newer systems in place. So one example is I went to an Asian airline a number of years back to inspect an A330, and I got there, and I really had to speak to one person to deal with landing gear, another person to deal with engines, another person to deal with airframe, another deal with APU. All the records were kept on paper, and they were kept behind a locked door where you actually literally had people just going through DFPs and sorting them by aircraft type. And you walk into a massive room where you literally have crates and crates and crates of paper records. So the room is secured, limited access. However, access to those records digitally, excuse me, um, is a challenge. So when you do go to inspect an aircraft, and you're dealing with more of the legacy carriers, and they are moving towards digitalization, but it's a massive task. If you have 300, 400 aircraft in your fleet, that is a monumental task to digitalize and sort and put together in the right kind of organization those digital records. So I'm sure that'll be a discussion point today, but especially now as we are trying to do due diligence of aircraft digitally, um, access to these records becomes a challenge. If you're trying to move an aircraft from airline to airline or lessor to lessor, and you're trying to get that due diligence done, access to those records to paper records has been a challenge. People are not on site to go work at the airport, as people have had to be either been furloughed or forced to work from home. Access to those points of information has become more of an increasing challenge. I think we're getting through it, and I'm sure there'll be stories for the rest of the afternoon on how best that's been handled. And I'll leave those to the better experts on that subject matter than more than myself. But it becomes a very key point of your access and due diligence of an asset, of the technical records as a lessor, um, and that relationship with the lessee. So, and of course, we wouldn't have anything without airworthiness directives, and this really comes down to this is a cost point. We all know what ADs stand for. We all know kind of the purpose. We've been very familiar with them, if especially in the last couple of years with the MAX aircraft. What has happened? I think people have gotten a deep dive and education on airworthiness directives more than they ever wanted to. But actually, it's good to know this. It's good to know how they come into play. It's good to know how they're used, and it's good to know what purpose they serve within a lease, and how much, whether the lease considerations. So in a lease consideration, these are negotiated points. Usually it's a clearance window to ensure that at redelivery of the aircraft that you are looking at, you have a window of clearance of ADs and who pays for that. So in some cases it's 6 months, 9 months, depending on how it's negotiated. But when an aircraft leaves an airline's fleet, um, and it depends on also you have to deal with the jurisdiction, the fact that is it EASA or FAA, and that is the difference. There are EASA ADs and there are FAA ADs, as we can see right here. And that is a negotiated point at least too. If the aircraft is being operated in Europe, you're going to lean on EASA. So in some cases, a lessor is able to negotiate the fact that, well, we expect this aircraft to go back to the US or North America. We want you to have clearance on both EASA and FAA ADs. Not many airlines agree to this all the time, but it depends on really the spirit of the lease and who has the negotiation leverage in the event that this aircraft is expected to return to the US registry. So just kind of going forward, now we're towards the end of the lease, and I think we're winding up here, but just a couple of more points as we look at the return conditions, and how they all kind of frame out, and then kind of what is really left for at the end of lease. So in a perfect world, we've negotiated technical return of the aircraft. We expect there's going to be minimum thresholds in the airframe. We have minimum thresholds in the engines, usually maybe coordinated hopefully with a return from a shop visit, an engine shop visit, or no more or less how many hours from that shop visit. So the lessor knows how much life they'll have remaining for the next lessee, and that is a very key point for them, because they need to negotiate perhaps a follow-on lease and understanding how much time is left on those engines, how the airframe's coming back, and the minimum thresholds that clear that. So for older aircraft, it's a mirror in, mirror out. The aircraft has to be returned with same or better life, usually when the aircraft was delivered to the lessee as to be redelivered. For same with new aircraft. Sometimes with new aircraft, it's a little bit tougher because you're not really going to zero out all your components all at the same time, but you will give clearance. You'll give clearance of either 7,500 hours or so many months or cycles, usually a combination of all three, to ensure the fact that the aircraft can be used without going to maintenance for a certain window of time, usually a couple of years for the next lessee. And then there's obviously the payment situation of this, of an upsy downsy, usually a credit for maintenance reserves, and then usually a top up. So all of this kind of comes into play when you have you do your analysis, and this in some cases becomes a negotiation unto itself, because end of lease compensation, especially in some of the leases, um, it's been purposely left vague. So there's going to be the airline's version of end of lease compensation. There's going to be the lessor's version of the airline of the end of lease compensation, given the fact that there were certain push levers to push and pull between the different components. How much money was accrued for an airframe versus a shop visit? Can it be cross mixed around? Can it be credited out? So you kind of have to know algebra and in some cases the Pythagorean theorem in order to understand some of this. But that analysis is critical, and then it either then becomes a negotiation, or sometimes there's just a check to be written and say, okay, that's what we agreed to, so be it. If there's a requirement or need to have that lessee relationship. So and then the physical return, obviously the location, the painting, the configuration, the documentation, any removal of buyer furnished equipment, and the like, as to what gets returned back to the lessor at end of lease. Now, this all kind of gets overlaid with technical versus financial return. In the olden days, really, you would say that you would expect multiple leases to be carried on, but the financial return is now more prominent with end of lease compensation, and that analysis becomes a little bit more granular. But here, the issue now is the current considerations. Now we're returning aircraft in default, and that default